So welcome to our event series dedicated to helping you learn about the different ways to get funding to grow your business. This is, as I was saying, the third and final episode of the series, during which we will talk about how to attract investment to take your business to the next level with Neil Dillon from Swoop, who's Neil is the head of equity at Swoop. Neil, thank you so much for joining us today. How are you doing?
Very good. Yeah, very happy to be here. And thanks for having me.
Fantastic. Well, thank you so much for being here. I'm Valentin Hutchings. I'm part of the team here at Tide. And for those of you who are new to Tide, just a very, very quick overview of our services. We are the fastest growing online business current account provider in the UK, and we are used by 400,000 businesses. And the whole reason we exist is to save small business owners both time and money when it comes to their business banking, so that they can actually focus on growing their business. We have a quick and easy sign up, and the app is packed with a huge amount of products to make your banking life a lot easier. So like our auto categorization tool, our invoice feature that allows you to create and customize and send professional invoice. And particularly relevant today, our Cashflow Insight tool that allows you to access a range of credit options to suit your business, like business loans, business cash advance, or of course, equity finance that we offer in partnership with Swoop. And I'm sure Neil will tell you a bit more about this later. One thing to note that is important, our Cashflow Insight tool is a data analytics tool, and it should not be constructed as final advice. Of course, seek independent financial advice before making any decision about your financial future, including before entering into loans or purchasing any credit products advertised by Tide. Neil is going to give you loads of advice around, what to look out for in terms of what's going to be suiting your business and the type of loan that might suit your business better as well. I'll talk to you a little later on about how to make sure to stay up to date with what we're doing at Tide. But for now, let's start. And without further ado, we'll let Neil introduce himself.
Hi, everyone. My name's Neil. I'm head of equity at Swoop Funding. Swoop Funding is a funding platform that helps SMEs and startups like yourself get access to funding across a whole range of different products, from debt, equity, and grants. My main focus is on the equity side. So I have a team. We review pitch decks. We've got a great big network of investors. And why I'm probably here today is because myself and my team have reviewed over 2,000 pitch decks over the last few years, and we've done quite a few deals where we work with those, finding the right investors for founders. So I can tell you a bit more about that later. But yeah. Thanks for having me.
Fantastic. Well, thank you so much for being with us, Neil. Really excited to have your experts' insight and tips shared. We've both introduced ourselves. We'd love to know more about you. So I'm going to launch a poll asking about, when you started your business. This should be appearing on your screen. I can see a few of you are answering the poll. Yeah, we'd love to know when you started your business. Okay, I'm seeing a majority. Oh, no, this is changing. A few of you are still able to see the poll. That means you haven't answered it yet. If you can take a minute to answer it, that'd be great. Fantastic. I think I'm going to end the poll now. This is great. So we have 20% of you watching us live that have started a business this year. Congratulations. It's really great. 30% started it in the past year, and then 30% in the past 2 to 5 years, and then 20% of you have started it 10 years ago, 10 or plus years ago. So massive congratulations. That's fantastic. Thank you so much for taking this poll. That's really helpful as well to know a bit more about you. And this is a great way to go straight into the first question. So Neil, can you tell us a bit more about the funding landscape and what type of different funding options are available to small businesses?
I certainly can. And to make this a bit easier, because there are so many options out there, I'm going to share my screen and actually just show you a 360 view of what's available, or as I like to call it, the funding buffet. So hopefully you can see my screen now. I'm going to go through a few of them. Obviously, with some time constraints, I don't want to go too in depth into all of them. But as you can see here, there's lots of different options here. I know some of you are at different life cycle or different stage of your life cycle, given the years that you've been in business. This is relevant to really any of you. It's more focused though on the earlier stage, but I'll go through a few of the options. So on the equity side, and we're going to talk in more detail about this a bit later, so I won't go too in depth, like I said, but crowdfunding, you've probably heard about it. It's really popular at the moment. It's been a great addition to equity funding, especially within the UK. Within the UK, there are two main providers. There's Crowdcube and Seedrs, and they actually offer the ability to put your business on Crowdcube or Seedrs on their platform and allow retail investors being, not professional investors, probably investing much more smaller sums, and then investing all at once into your business. It can be really great because it means that you get investors that become really big advocates for your business. It works especially well for that reason. It works especially well for B2C businesses, so business to consumer businesses, and because it's easier to understand, they're probably going to be the ones buying your product, and then they tell their friends. So word of mouth, and it's a really good way to do it. One of the things that people probably don't know about crowdfunding is it's not just a silver bullet. You can throw it up on the platform and then people invest. Realistically, you're actually going to need a lead investor before you can go onto the platform. So you probably, if you're looking for, say, 200,000, you're probably going to need at least 100,000 already committed before you'll be able to go on. That's really to protect you and the platform. So they don't want your business just sitting there, 10% funded, because it just doesn't look great for anyone, really. It doesn't look good for you or for the platform. So that's one of the main reasons why they do it. With this, you're always going to need strong marketing materials. We're going to talk about pitch decks later, but you're going to need really nice videos and things like that. So really make sure you get that right. Now, Crowdcube and Seedrs, they're really great at supporting people to do that, but also sometimes you can get some outside help to really drive home a great story. Some of the things I'll talk about, SEIS and EIS. So these are tax schemes that were set up in the UK. They are some of the greatest tax schemes for startups around the world. Lots of other governments are trying to copy it, but no one's done it as well as the UK have. Now, what they are is it's the Seed Enterprise Investment Scheme. So it means that a business that's under 2 years old can find 150k investment under this scheme. And what that means is the investor who's invested in you can get 50% back against their tax bill for the year. And they pay no capital gains tax on the profits and no inheritance tax. So as you can imagine, that really de-risks an investment in your startup. So it really makes it a much more attractive investment. The EIS one is just the big sister of SEIS. It's the Enterprise Investment Scheme, and that's for businesses that are 7 years or younger. And you can actually raise up to 12 million in the lifetime of the business, and 5 million any given year. The only difference is the investor can write off 30% rather than 50% against their tax bill. So you'll hear more about SEIS and EIS because it's so important, because so many funds have popped up in the UK ecosystem, basically just wanting to invest under those tax schemes. So make sure you get advance assurance, and I'll talk a bit more about advance assurance, but basically that's proving that you are eligible for these tax schemes. So yeah, lots there. And then other things that I'll just touch on briefly, there's family offices out there. Sometimes in the UK, it's a bit of old money, or it's, families that have done really well and they set up offices to invest in startups. Traditionally they're interested in retail and food and beverage and things like this, but they're more and more getting involved in the tech landscape. I won't talk too much about venture capital. You've probably read about this in the news. The likes of Uber and Deliveroo and stuff, they're getting the big investments from things like people like Sequoia, Local Globe. It's really great if you can get on their radar. It's fantastic. Often they are great partners to have. They do put they might be the first or second investment in, and they'll hopefully support you throughout the life cycle of your business. And then there's high net worths and angels. They are so important to the ecosystem. They're often the first investors in, and they really they sometimes as they might say, they might take a punt earlier on a more risky startup. Rather than venture capital often have a criteria that you must hit, traction that you must have, whereas angels sometimes will have that same criteria, but they might be willing to have a bit of a passion project, and they say, no, I really like vintage cars, so I'm going to invest 50k in this. And it can be sometimes easier to get that first investment from angel investors. So that's the equity side. Again, we're going to talk about this, but what I really want to talk about was the loan side, just very briefly, and grants, because these are often overlooked by founders. The reason being is because people, they read about the venture capital investors and they say, I need one of those because that's all the best businesses that I hear of. They've got venture capital backers, so I need it. That's not necessarily the case. So many businesses start off with getting some sort of combination of all these things, either a bit of equity investment from an angel investor, a loan because they get an invoice, I'll go through all of them, but where they go and get a grant or R&D tax credit. So it's really about knowing what's out there and taking a bit of a combination of all of them. And I'll show you an example, one of the examples being Swoop later. But asset finance, so this can be any sort of assets like laptops, vehicles, and they take security on the asset as opposed to your business. So it's a cheaper form of finance, and also they'll consider businesses that are less than 6 months old, and you don't have to be a profitable business. So again, really important for startups to be aware of this, because it could be a really great way to start your business. Invoice financing and trade financing, quite similar, but say you're a consumer product and you've got a great drink and you've managed to get a deal with Ocado, and they say they want 50,000 units of your drink. Well, you might not have the money to do that. What you can do is it's called spot invoicing. You go to one of the lenders and you say, I've got an invoice from Ocado, but I need the money to fulfill it. They'll advance you that cash, and then again, it's quite reasonable interest rate on it, and then you can fulfill that order, and then you pay back Ocado once Ocado paid you. So a really good option to look into. It's cheaper than overdraft. Sometimes people use overdrafts. Commercial mortgages, again, this is like a normal mortgage, but you're doing it on a commercial property. I won't go too into detail, but that's also a good option for people who actually own a business or own a business property. And then you've got your business loans, secured loans, unsecured loans. These are typical loans you've probably heard of. Again, there's more options out there than just the high street banks, is what you need to remember. At Swoop, we've got about 100 different lenders on our platform, and you go in, you give a bit of information, we match you to different lenders out there, and you might see the likes of Lloyd's pop up, but you'll also see peer-to-peer lenders, or you'll see revenue-based financing lenders, all those different types of lenders. So there's lots more out there than just your traditional high street banks that you've been banking with for several years. And Tide as well are starting to get into the space as well. So working capital is another one. Again, these are probably not ones that you want to be taking out long term. They're higher interest rates, but sometimes they can help you with the everyday operations, and you can get a working revolving working capital facility. So it just means it's there when you need it, only use it when you need it, and it's a good option to have. One that's really big in the market, and I'll just touch on briefly, is revenue-based financing. There are so many operators now in the market. You might have heard of some of them: Clearco, Iowaka, Forward Advances, really great offerings out there. What this is, it's really great for e-commerce businesses. So if you're on Shopify or Amazon or anything like that, and you're selling, you're doing high volume, they can actually see and forecast out based on your monthly recurring revenue that, okay, I trust that these guys have had so many customers in the past, and they're going to have these customers for a few months more. So then they can offer you funding, and what they say is it's an investment in the future revenues of your business. It's not technically debt, but it's a really good option to have out there, and that you can get some pretty good interest rates on it. And then I'm going to just talk about grants and tax refunds. So R&D tax credits, if you're doing anything technically challenging and you're spending money on research and development, you can actually get these tax credits. You can apply to them. You apply 9 months after your financial year end, and you submit it alongside your corporation tax. But what it really means is you can get up to 25 or 30% of the spend back on your R&D. So it's a major cash injection back into your business if you can get it. Also, if you get it, there might be a backlog, often there is. We can organize an R&D advance. So this is a loan based on you getting your R&D tax credits, and you release that money quite a bit earlier. Other things like patent box. So if you've actually managed to get a patent for your business, you can pay 10% corporation tax rather than 19%. Obviously, that's an amazing thing. And then there's grants from all the way up to Innovate UK, where they'll run competitions. You should really sign up to their website, and then they'll send you different emails. Now, some of it might not be relevant to you. You can tell them what sectors you're interested in, but keep an eye out for them. They are very time consuming to write a grant and to show different things, but it is effectively free money a lot of the time. They sometimes come with conditions, but it can be really worth it if they put out a grant that is so specific for you and you're thinking, okay, I could win this. Swoop has won several grants in the past, and it's been amazing for us. So really worth checking out. Other smaller ones, grants come from the regional growth hubs. There are 38 of those across the UK, so check out your local one. Also the local enterprise partnerships. So there's so many grants out there, and again, Swoop helps matching you to them, and we provide that as a partner with Tide. But yeah, really keep your ear to the ground on those ones, because they can be really great. And then lastly, I'm not going to touch too much on it, but savings. Make sure you're not spending, doing your foreign exchange with the high street banks. Be doing it with people like Tide and things like that, or TransferWise, whatever you might want to do it, because there are different apps and different services for all of these services now. So you should be saving money there, and your insurance and energy and things like that. Make sure you're keeping an eye on that. One of the stories I always tell is there's lots of these products with freemium models, and like Miro, they're fantastic, and they do product processes, but as soon as you're off that freemium model, you'll be hit with some nice fees. So just be really careful that you're keeping on top of all the products that you're using. Yeah, so that's just a whistle-stop tour of the funding buffet. I'll just show you one example, and it's Swoop. This is just to show that there are so many different options out there for a business. Startup loans, so I actually didn't touch on that, but you can get up to 25k per director for a startup. Enterprise Ireland competition, so they did a grant with us because we are an Irish business, but there's also the equivalent in the UK as well. SEIS investment, so one of our first investments was under that tax scheme that I just told you about. Again, really positive to get some great investors in under that tax scheme. Nesta Open Challenge, again, this is another grant to 350k. We won that competition. And then we went for the bigger EIS, which is the Irish equivalent of EIS. Then we have EIS, Tier 1 investment. I won't go in, but it's foreign investment. And then the last one, Capability and Innovation Fund. So we actually won 5 million a grant that way. So as you can see, we've touched on basically all the different types of funding available in the market just there from our case study. So Val, I hope I didn't go on too much, because I know you just asked a quick question, but I just wanted to touch on everything because it's really important that startups know what's out there and available to them.
Absolutely, and thank you so much for sharing this. I think it's great to have the landscape on one slide, which is quite challenging because there's so much, but that's fantastic to know that there is absolutely a lot of different options available to suit many different types of businesses. So this is really great. If you have questions for you joining us live, watching us live, of course, this will be on YouTube later on as well, but please do put your questions for Neil as well. If you've got questions that are specific to your business types, and you're wondering about a specific type of loan or grant or equity funding, please do use the question box. We'll get to those in a minute. What would be great as well for us to know is the portion of you that have raised capital for startups. So I've just launched a poll to ask you. It should be on your screen. If you can take a second just to let us know if you've raised capital before. It sounds like we have a 40-50. Oh, 45-55. Okay, thank you for taking the poll. A few of you are still replying. Okay, I'm going to stop it now. Thank you so much. We have a 60-40 ratio. So 42% of you have already raised capital, 58 haven't. So thank you so much. This is very interesting. So what I think it would be super helpful, Neil, is if we could go into a bit more details onto, you know, equity funding, and if you could tell us about where to find those investors, how to reach out to them.
Yeah, of course. And congrats to those who've already raised before. It's a really difficult thing to do. So you must be doing something right. So well done. And to those who haven't, hopefully today's session will help. But yeah, so the first question I would ask when you're saying, okay, I need to find investors is, do you really need investors, or do you need them yet, is probably the real question. And something that's often overlooked is bootstrapping. So that could really be your best option. Bootstrapping is it's basically using money from that you've either saved yourself, or using the revenue that you've got going already from organic growth and things like that. So often, yes, one of the best ways to grow is to have money, to have a big marketing spend, get a great app built. But sometimes if you start slow, you build a minimal viable product, you get a few users who start paying you, and then you just put the money back in. Yes, growth will be slower, but it is probably a more sustainable way to grow a business. So just make sure that you really need investors yet, or have you actually proven the market? Is there a market for this yet? Because if you haven't proven that, it's going to be very hard to get investors. So just be really careful there. And then, like I've just touched on, where have you actually explored all the debt and grant options available to you? Because maybe there's no point in giving away part of your business, because if it all goes well, wouldn't you like to be able to keep the profits to yourself and be in charge of the direction of the business? So that's just the first thing I'd say. But as to where you'd find them, so if the answer to that question is yes, well then I'm a bit biased here, and I'll just do a quick plug. Sign up to the Swoop platform, and then you can speak to a funding manager, and actually you'll learn what investors are out there in the market. Now, I'm not saying Swoop has all the investors for all the different niches, but we've got quite a vast network of investors, up to about 250 investors at all different stages of investment. So that's what I would say, obviously. But other things you could do is use your network. So LinkedIn, friends and family, alumni communities, these are all really, really helpful. And like LinkedIn, yes, sometimes we might find it annoying or draining and things like that, because there's so much going on it. But if you've got a real purpose and you're looking for a specific type of investor, then it can be just so powerful. Writing really well crafted messages. And again, you might not get the reply first time. Maybe I always think 3 or 4 times is acceptable. At that stage, probably don't leave them alone. But yeah, it's really trying to capture their attention, because a lot is happening on LinkedIn, and other things that they're using, like their emails. But it can be really powerful. And there is a very good search engine on LinkedIn. Friends and family, yeah, they are the people that trust you most. You can get the most amount of their time. Just obviously be careful that you're explaining the risks to them as well, because many startups fail. I think we all know here that it's a risky game for investors and for the founders. Yeah, yeah, go on.
And just to plug in here, Neil, because the first episode of this masterclass series was with Tides founder George Bivis, and he talked about all the different ways he funded his different businesses, the successes, the failures, and the learnings. And he talks a lot about borrowing from friends for different businesses, how did that felt like, the pros and cons of this. And also he talks a bit about investors and how to reach out to them as well. So if you wanted to have a bit more information around those and the vision of our funder, do check out the episode 1 of the masterclass. But thank you so much. I think this is very important to keep in mind, different solution, but also pros and cons for each as well.
Yeah, exactly. Yeah, check that out. It's a real skill knowing how to reach out to the right investors or speaking to friends and family. So check out that masterclass. Other things people always ask, where do you find angel investors? Again, really hard. If you hopefully, if you're lucky, you have some rich friends over the years. If not, then I suggest you can actually search angel networks and angel syndicates, and they're often local and regional pitch events. So we work closely with the Dorset Business Angels, with angels in Milton Keynes, in Cornwall. So they're really willing to take in pitch decks, review them, and often they have about 5 or 6 pitches in each event, and they probably have an event every 2 months, I would say. Some do it every quarter, some do it every month. It depends on how active those angels are. But really check out if there's any local pitch events in your area. And then you can find angel syndicates if you just wrote it into Google. You can find some if you need a lead. Sometimes we have angel syndicates and angel groups on our platform, so maybe we can help there. But Yusuf, yeah.
Sorry, Neil, I think you froze for 1 second.
Oh, okay. Sorry. I don't know exactly what we missed, but yeah, I was just saying, yeah, angel investors, they can be a little bit elusive, but actually lots of people on LinkedIn, they put their name, they'll have it in their bio. Be careful, sometimes they say, oh, I'm a high net worth or an angel investor, but they might be hobbyists, they like talking to founders, things like that. So what I would say, the biggest tip for a founder is just be conscious that your time is very valuable as well. Because lots of these angels, they might say, yeah, I'd love to hear more, or can you keep me in the loop? But really, they're just maybe stringing you along. So really, you have to gauge whether that angel investor is truly interested and might write a check, because your time is valuable as a founder. Yeah, sorry.
No, I absolutely love this. I think it's incredibly important, especially when you're in this relationship where obviously you want something from the investor. So you want, you're going to be doing a lot to make sure they know about your business and putting your business in a good light. But it's so important to also remember that your time as a business owner is incredibly valuable and very, precious. So yeah, make sure to protect that as well, for sure.
Exactly. And then I'm just going to touch on 2 more things, because I could venture capital funds. Yeah, you can submit to the pitch decks to them. Sometimes you need that warm introduction. That's one of the main things. But other things that are maybe of interest are regional funds. So it's very competitive in the UK market to get in front of a VC, get them to even read your pitch deck, let alone accept and do an introductory call with you. But there are regional funds out there like the Midlands Engine Investment Fund. The British Business Bank have lots of different funds, the Cornwall Fund, Scotland Enterprise, all these are regional funds that are looking for businesses within obviously a certain region, and you are making it that little bit less competitive. The competition has become smaller. Now it's the region and not the whole of the UK. Mm-hmm. And also they may not expect the same, exponential growth or returns. They may not want 100x their returns on their investment. They may think, actually, this is a good solid business. Maybe I'll make in a few years, I'll make 5x my return, which would still be an amazing return. But they really want to help people who are bringing business to the regions, employing people in the regions, or just have even some operations in the region that they're working in. So just want to keep an eye on. And then crowdfunding, I did mention this. The main thing here is creating a sense of FOMO and really getting that lead investor. I think someone's asked about lead investment, and we'll get to it. But yes, Swoop does help find that lead investor, and we work closely with Seeders and CrowdCube to find them and get them live on the platform. But yeah, doing a really good campaign and creating that FOMO means that you've got a lot of publicity, you've got the investment you need, and people are dying to go, when is their next round? I actually want to write them a check. And investors think they've done a great job on CrowdCube. They obviously have customers that want it, and that's a good way of proving the market as well. So it's ticking a lot of the boxes when you do that in the right way. So yeah, I think hopefully that answers your question on just the different funding and equity pieces, because I did go over a few of them. And the main one where we are strongest is SEIS and EIS funding, because they're the most active in the market. They're within those tax schemes, so they're just benefiting from what the UK government has created. So founders and investors alike are really doing well out of those tax schemes.
Great, thank you so much, Neil. That's so much good and insightful information. I can see there's so many very good questions as well keeping on coming up. So do continue to put your questions. We'll get to those in a minute. Just before that, one thing I wanted to ask you about is the investor mindset, because obviously they are on the lookout for very specific things. So if there is, tips you can share with us today on, what the investors are looking for, how to get to their mindsets, that'd be great.
Yeah, investor mindset is such a thing to keep in mind, obviously, because you need to know who your audience is. And I have a slide actually here that I'm going to share just to show the 6 things that I think are most important for an investor. Now, these things might change in the threshold and the range that an investor might expect from you, might change whether they're an angel investor or a later stage VC investor, all those things. But it's just really important to know who your audience is. But before I share the slide, I just have these 3 guiding principles, and investor mindset is one of them. And it's that less is more. So we've heard this kind of before, but like I said, we reviewed over 2,000 pitch decks in the last 2 years, and VCs probably even more, depending on what VCs they are. So we retain about 5% of each conversation. So keep it really simple and create interest. So don't give away too much, but just give away enough that, people are going, oh, I really want to know more. Again, investors will spend on average about 2.5 minutes, if you're lucky, on your pitch deck before they decide, okay, looks good enough for me, I want to talk to the founder. So really, less is more is a really good guiding principle. Tell a story. So most people are investing in you rather than just a product. So they really want to know about the founder. How did you get to this? Why are you building it? And why should they invest now in your company, and why they should support you on your journey? So yeah, really tell a story that captures the imagination. And then there's the investor mindset, which I'm going to go through here now. Let me just share my screen, just so I think some visual aids help with this. 1 second.
Great.
That should be on your screen.
Absolutely.
Excellent. Oh, is that, yeah. So is that showing the, yeah, I think it is.
The graph of the get into your investor mindset. Yep.
Excellent. So again, I'm just going to go through these pretty quickly, but what is your problem? Do you understand it? And is there actually a problem? Does the investor agree that there's a problem? So you might know something about a really niche market. You think, oh, this is a problem. You either have to bring them on that journey and tell them about that niche, or you can't just be a nice to have. And sometimes it can be, okay, it's not a hard, dead rule, but it really needs to be a problem that they agree, okay, yeah, that is a problem, and I can put myself in their shoes, and if you can solve that, then we've got a product. So just make sure that you've got something to back it up, whether it be on a micro or macro level. So tell a story of someone, put the investor in the shoes of the person having the problem. Is there stats that back it up that say people in the market are having this issue? There's 1,000 in the last month have been suffering from this problem. All those different things really help to tell that story. The product as well, does it work to actually solve that desired problem, or is it a proper solution, and can it solve that problem? So just be really careful that you have something tangible there. I won't touch too much on SEIS and EIS, but they're going to think, okay, can I invest under these tax schemes? Because can I save myself some money and de-risk? And then that means they'll be able to make more investments that year or things like that. So that's a bit of a no-brainer. If you're eligible for those tax schemes, go ahead and do it. The market, this is huge. So is there a big enough market? So they want to know, they're looking at your pitch deck and saying, okay, some of these things may happen the way they're saying it's happening, but it's probably unlikely it's going to be as rosy as you've made out. But if it all goes beautifully, is there enough space in the market for exponential growth, where you've got billions that could be made by the investor, because it is risky. If there isn't a big enough market to grow into, they might only get 3x their return, but actually there's probably other safer bets that they could make to get that return, other than investing in your early stage startup. So make sure that there is the market there, and it's big enough. Also, the team. This is where you need to have a really great team. Obviously, sometimes some of you may be solo founders at the moment. That's okay, but then you need to be aware that you need to be looking for the right other co-founders and the right people to make your dream a reality. So really be conscious of that. But if you have a great team in place, really bring it to the fore. Tell the story of how you've gotten there, why you have the experience, why it's indispensable. Because I look at the where investors spend the most time on the pitch decks, because we can actually track that, and it's always the team slide. So out of the 2.5 minutes, they'll spend about a minute plus on the team slide, and sometimes that's the one they leave open because they're clicking on the LinkedIn and they're checking who they are, all that stuff, before they meet them. So it's really, really important. Resourcefulness. So I did touch on bootstrapping, and now if you've bootstrapped for a year or two and you've actually got good traction, that's really great. Or resourcefulness in terms of, have you decided or managed to win a grant, or have you been able to get family and friends on board? Have you able to make the most of what you have before just going, oh, I have an idea and now I need a big investor? They really want to see that you're driven and you want to make this business succeed. So what have you done to prove that you are willing to go the extra mile to make it a reality? And then lastly, the age-old question, how much traction do I need to get investment? It really depends. And I know that's not the answer everyone wants, but it is the reality. Sometimes all you need is a minimal viable product, or you need certain users. They don't have to be paying. Obviously, one of the best forms of traction is revenue. It really depends on what sector you're in as well. If you're engineering and capital, if you're in a sector that's either engineering heavy or capital intensive, and you need that investment to get that traction, well, then maybe it's just market research that you've done, or maybe it's proof that your new patented engineering product works better than it did before. Maybe that's enough. But if it's a consumer product, they're going to be saying, why haven't you gone out into the market and sold it? Can you prove to me that people want the product you're selling? So these are all things that you should keep in mind. I'll show one of the funny memes that we use for this. This is an investor sitting down, and Vince McMahon, a very famous investor, of course. But yeah, huge addressable market. They've seen a strong management team. They're EIS approved and they're profitable. Oh my God! Now the profitable one, I don't think you're going to hit as a startup, so that's just a bit of a joke. But if you're hitting, 3 of those points that I've met, you're probably a pretty good startup, and you've got a lot of things going for you. So really make sure that you are hitting some of those. I'll stop sharing now.
Fantastic. No, thank you so much, Neil. Talking about the different ingredients, and just because I'm aware we've got some fantastic questions and I really want to make sure we have enough time to get to those, but talking about key ingredients, you mentioned to me whilst we were chatting about preparing this masterclass, that the pitch deck there's some key ingredients that they must have. So if you could, share more about this and your expert knowledge on this, that'd be fantastic.
Yeah, so I have shared a pitch deck template that I'm sure you can share with the attendees after, and that's really useful. It goes through everything that you should be having, and this is just almost a comic book strip version of that. But these are things that you should have. You don't have to have absolutely all of them, but most of them are pretty essential. Having your details on, the name of the company, all those things. A punchy single line really helps to kind of say what you're about, and why you're a great company. Other things like we spoke about the problem. Do you really have that problem? And then how are you solving it? And I'm not going to go into the painkiller versus vitamin, but this is kind of what I was talking about. Is it a nice to have, or is it actually something that you need now? And a vitamin, something that people don't always take their vitamins because it's something in the future. But actually, once you get sick, then you're like, give me that painkiller. And the painkillers are the ones that sell better. It's just the way of life, I suppose. But you can look into that yourself and how you make sure that you're a painkiller and not a vitamin. But yeah, as I said, I don't want to go too much into that. It's just a nice example. But make sure you have a nice solution slide. Unfair advantage. We talked about the team. Is your team extremely experienced? Do they have this knowledge that no one else has? All those things. Do you have market access? Do you have access to a market that other people wouldn't have? I had a client who was selling lotus seeds, and he's from India originally, and his mother used to pop lotus seeds, and they were the best. Well, as he said, the best lotus seeds that you could get. And he also was in Britain, and he had access to the retail market. So that is market access that not many other people would have. He had the supplier going to get him the lotus seeds, and he had the retailers on the other side in the UK. These are just examples of an unfair advantage. So really show that and bring that to the fore with investors. Also with demo, if you can actually demo, if you've got, this might be a tech demo where I would use a video. If you can, always keep those videos short. Things like a demo, if it's a consumer product, like in Dragon's Den, see if you can get them to try it. If it's a food or a drink or something like that, it can be really powerful. Again, just on that, you don't want to obviously be sending your drink or food to absolutely every investors, but save it for the ones that you really like. And I can talk about a bit later, but once you make your list of investors, you'll have the ones that you really like and you're thinking they'd be the best investors for me. Always leave them to the end, because by the time you speak to them, you're going to have perfected your pitch deck or your pitch as well. So it's just a good way of learning as you're doing. And then why now? Create that sense of urgency around why now is it the best time to invest? Is the trend going that way? Is there technology that's just been invented that make this possible, and we should get into the market as quickly as possible so we're one of the first players? There are lots of different reasons why you think the investor should invest now. So make sure you make that clear to them. And then just one more slide, because I know we've got questions and we won't leave time for that. Again, I spoke about market sizing. You should look into the TAM, SAM, SOM model. This basically goes from the biggest market possible and right down to really what's achievable in the next few years. You should look into that. You should have a pretty detailed TAM, SAM, SOM model done, which explains your market sizing. Other things, competition. Who's the competition in the market? What are their KPIs? What do you know about them? What insights have they given to you? It's very rare that you should rarely say, oh, there's no competition in the market, because there is always some indirect competition. If they're not spending their money with you, they're just spending their money somewhere else. And it might not be so obvious, but really dig down deep, because sometimes the worst thing you can say is, oh yeah, I have no competition. And the investor thinks, I don't believe you. So just be careful there. And then the other one, sales and marketing. How are you going to sell it? How are you going to market it? Do you know if influencers are the best way to do this, or you should be doing SEO, search engine optimization, or should you be doing traditional marketing and just putting it on a big billboard? But whatever you want or you think is the best way, make sure you can back it up with real life research on it. And then business model. How are you going to make money? The KPIs, the main ones are your average revenue per account, average revenue per user, the customer lifetime value, the customer acquisition cost. All these things are really important to know, because the investor is going to want to dig down deep into that. The product. So what is the tech behind it? If it is tech, what's the secret ingredients? If it is, now don't give away all the magic there or all your trade secrets. By the way, in the investor world, people do not sign NDAs until later stage. So you should have a pitch deck that you're happy to share that is not giving away all the secrets of your business. So it should be 15 to 20 slides and not giving away everything. If it is a big secret, then later on you can ask them to do an NDA. But in the market, it's just not really done. So don't expect investors to be signing them easily. And then the team, we've already touched on this. One more thing I will just say, if you're only a one-man band at the moment, make sure you're giving a profile of the people you're looking for to make your business a success. Financials, what forecasting have you done? How long, what's your cash burn? How long are you going to last if you get this investment? Hopefully it's between 12 to 18 months, because they don't want to give you investment and say you come back to them and looking for more money 4 months later. It's really important that you know how long that cash burn is. know your revenues, know your costs, so all those things. Generally the slide or the graph looks like this, and it says, oh, you're going to make a great amount of money in 5 years. That's okay. Just make sure you can back it up with some reasonable assumptions. And then lastly, the status and milestones. Where have you got to so far? And actually, sorry, not lastly, it should be on here, but it is in the pitch deck template, is how much are you asking for? You need to say, I'm looking for the 500,000. This is how I'm going to use it. And you should always on that slide say whether you're SEIS or EIS advanced or short. I'll leave it there, just in terms of the different ingredients. There's a lot in there. As I said, the template will be sent around, but these are the main ones to have in there. You can always add more though as well.
No, this is absolutely brilliant. Thank you, Neil. And really, really great tip to, save the investors you really want to get in touch with at the end. Make sure you have the time to practice with other investors that might not be the perfect match for you. And just because I saw the demo fail, right, be prepared for the demo fail. Our founder actually in his masterclass talks about the time he is in front of investors and the demo for the Tide app doesn't work. So that's a great story as well that he's telling during his masterclass. But yeah, before we get to the Q&A, I can see some fantastic questions. Thank you so much. Do continue to put them in. There is one thing I love to ask all our expert speakers when they come in the masterclass with us is, very action orientated. What are the few things? What are the few things that people either watching us live or later on YouTube, because this is recorded, can do straight after this to make sure they are investor ready?
I'm really banging the drum for SEIS and EIS, but get your advanced assurance there, so you can put that on your slide, and they go, okay, my investment is de-risked. So I think that's probably number one. The other one is getting a great pitch deck together. But actually, even before that, get an idea of who your ideal investor is, and then you work to make that list. Now you can do that yourself. Again, Swoop helps with that, and we can come up with that target list with you that we're connected in with. And once you know who your ideal investor is, then you know who your audience is, right? So that's how you create a great pitch deck, because you can make it bespoke to that audience. So yeah, those three things: SEIS and EIS advanced assurance, a list of the ideal investor and a persona for them, and knowing that audience, and then making a great pitch deck bespoke to that audience.
Fantastic. Thank you so much, Neil. This is super helpful to have in mind as well. And I really like the tip about having a list, knowing who your best investor can be, and having that list. Super helpful. Thank you so much for sharing all of this knowledge. Let's get to the Q&As, because they are fantastic. There's fantastic question in here. Neil, I don't know if there is one you want to start with. I can definitely just maybe answer Patrick first. Our recording of previous events available? Absolutely. The first one with our founder, George Bivis, he talked through the different way he funded his different startups. We have that available on YouTube. I'll share the link. And then the second one was with Gareth Price at the startup loans at British Business Bank. And we talked about the different types of loans available to small business owners and startup loans as well in particular. Super interesting one as well. So I'll send both recording of those.
Great. I'm happy to go through all of these from the start. Some of them be a bit quicker, some of them be a bit longer. But so I'll go through the first one. Does Swoop help find lead investors for seed funding? I think I did say yes, we do. And we work closely with Crowdcube and Seeders on that as well. Other one here is, what are the top considerations in your opinion when considering to raise capital for a brand new business? I think I've just touched on them. Considerations is, do you need the investment, and do you need it now? And exactly what are you going to do with that investment? How are you going to spend it? How is it going to make you grow in the next 12? Oh, sorry. How are you going to grow your business in the next 12 months to actually make your investor happy, and then hopefully get that follow-on investment. They're probably the main considerations, I would say. Yeah, do you need that investment is the main question to ask yourself. Other one would be, what stage does a company have to be at in terms of monthly, yearly revenue to become eligible for mainstream revenue funding or revenue financing? It's a good question. As I said, there's lots of players in this space. So ULens can go down as little as, I think, 5K monthly recurring revenue, as long as you can show that, yeah, it's consistent, and maybe you need, it depends, you might need only 3 months or 6 months history of doing that, but it really varies. If you want to learn a bit more about it, you can talk to one of our funding managers at Swoop, and we can talk you through all the different options available to you. I'll answer Ken's question. Do the high street banks have any appetite these days to lend, especially to a startup or relatively new business? From experience, it does appear they are totally uninterested. Yeah, the reality is they probably are, and this is why I spoke about all the different lenders out there. There's peer-to-peer lenders and people who have different risk appetite and different risk model, and they'll use forecasting tools rather than just looking at your profitability or how long you've been in business. So probably the high street banks are not your first option to do this. As I said, a startup loan from the British Business Bank is one of your best options. You can get 25K at a 3% interest rate per director. So that's pretty amazing, and can be the first bit of money into your business. So you should really check out that, or some of the peer-to-peer lenders. And then, sorry, Val, I'm just kind of hammering through these.
No.
Is that all right?
This is fantastic. I'm going to read the next one so you can take a breath. The next one is, where do you see people fail most often when preparing for pitches, and how do you suggest to mitigate this? This is a great question.
It is a great question, and I'm really trying to think, like, I think design is one of the things that people fall down on. I know it's like, maybe might not be people's fortes, and founders have different abilities, but if they have a design that just looks a bit off, the formatting is a bit wrong, and they've got it all a bit wrong, it's just like going for an interview. The first impression means everything, and it's better to be overdressed than underdressed, in my opinion. So definitely make sure that it doesn't look like you've just thrown together a pitch deck. And that, like our team, we try and help people, and we give pitch deck feedback. So we never want to give people a straight no, but sometimes when you look at a pitch deck, you're thinking, I don't think they put that much effort into this. We definitely wouldn't put it in front of investors. So then we go back to them and say, I think you need to either get professional help here, or go to someone who has skills to do this. So yeah, that would be the one that I think happens most often. And then other things like not having some of the ingredients that I mentioned before can also be a downfall.
Yeah, this is one that our founder was mentioning as well, and he was mentioning maybe just if you can afford it, pay a freelance designer. If you don't have a designer in your team, it's always a good option. All right, I'm going to mark this one as down. Tom is asking, can you explain what you mean by resourcefulness again? Is that, I think that might be the question. Yeah. So resourcefulness can really be a whole facet of things. It can be, have you managed to get some tech delivered? Have you reached out to a developer who's able to make a minimal viable product for you at a decent cost? Basically, it's everything that you've managed to do to grow the business without just having a lot of capital at your disposal. Everyone can make some progress if they have a lot of money to do that, and they can just pay people to do this. Now, that's often not sustainable, but resourcefulness means sometimes you can use sweat equity to get things done, and you might have a really good product because you've sold a bit of equity in your business in exchange for them providing you their services and to develop a product. That's one example, but sometimes that's not for everyone. You don't want to give away too much of your business too early. But yeah, it could just anything that has helped you to grow your business without just spending large amounts of money. I hope that answers it, because it can be everything, and I would end up listing so many things, but it's one of those things you just need to show that you can think outside the box and get things done. Great. And just, I think Thomas had another question we can answer live, I think, because one of the question is, at what point would Swoop consider taking us on as a client, and can we send our pitch deck to you? This is a great segue for me to let you know that I've sent on the chat. I've sent the recording for episode 1 and 2, but I've also sent Swoop's website, and I've sent the email address you can reach out to Swoop on equity@swoopfunding.com. And I've also pasted a link to all the futures and the different credit options on Tide we've mentioned if you wanted to have a look at. So hopefully that's the answer now, right? They can reach out to that email address.
At any stage, really. We do find it harder if you're completely pre-revenue, pre-product, all those things, but we have helped pre-revenue businesses in the past, and even some pre-product businesses. So we will look at anything. There's no, you don't pay anything to us up front. So there's no harm in submitting your pitch deck. You'll get some feedback, and we'll hopefully send you on the right route, even if we don't take you on as a client.
Great, thank you so much, Neil. Okay, I think we've 2 more, so I think we'll just take this one. I'll send a quick poll as well for you guys to let us know about the session. Neil, do you want to take?
I'm just reading it. Yeah, I'm just I'll read it aloud so everyone can hear it, obviously. Would investors have more comfort in a business if it has a buyer for the products already in place? Such we have a contract to build 10 new builds, units. Yeah, so I'm going to, how would you package it? Obviously, yes. If you have sellers or buyers ready to go, and you've got a pipeline of buyers, well then yes, that is incredibly useful. That should be on one of your traction slides within your pitch deck, and so definitely use that. I think there's a bit extra to here. How would you package this to interested investor, as this project will produce 4% secure uplift? Yeah, so you have to have a slide on this saying, we've gone out to the market already, these buyers have already shown interest. How it would be great if they've actually signed a letter of intent as well. That can be really great. And yeah, just make sure that you're telling that story in your pitch deck, because it's very powerful. Yeah. And then the other one is from Casper. What advice would you give for pre-seed ventures dealing with big tech ambitious projects that require big capital outlay, 550K, for example? I put in funds into UI UX development, have a pitch deck and scope worked out, digital design studio, building companies who would like to partner on it, but securing 500K pre-seed can be a little tricky. Yeah, it is a little bit tricky, but it can happen as long as you can show that. Again, it sounds like you've been pretty resourceful, you've gotten it to a certain stage, and then you need someone to take that bit of leap of faith, because you're saying, I brought it as far as I can until now I need that investment to get myself to the next stage. It's not beyond the realms of possibility. You could easily, well, not easily, sorry, you can raise that amount, and just make sure you've got that really good pitch deck, submit it. I'm happy to look at it, and the team look at it and see if we can help you. But yeah, I think it's always going to be tricky, but people do it, and that's how some great businesses get started. So it's not impossible.
Fantastic. Well, Neil, thank you so much for all those. Thank you. I'm seeing Casper saying thank you for the reply. But yeah, Neil, thank you so much for all those brilliant tips, and covering all of this in an hour was a challenge. So thank you so much. For all of you that have joined us live, thank you so much for taking the time. We know how precious your time is as a business owner, so thank you for joining us today. This will be recorded. This is recorded, and this will be shared on YouTube, so you'll be able to rewatch this. We'll be able to share the deck as well on how to create the best pitch decks. Hopefully this will be helpful as well for you. And best of luck, really, for raising funds, and hopefully all the best for your startup and your business. Neil, thank you again so much for taking the time. This was really great. Thank you for answering all the questions from our business owners.
Yeah, thanks very much, Val, and thanks to Tide, and thanks for everyone joining. Really good luck in the future for your startups. I hope you found it useful, and always get in touch if you need any extra help.
Fantastic. Thank you so much. Have a good day. Thank you.
Bye-bye.
Bye.